Welcome yet again to another episode. Today we continue the discussion on passive investments. As usual, I'm your coach, CPA Tonie Njiru, discussing matters to do with financial wellness and of course the avocado farmer. So today we shall be talking about investment in government bonds as an introduction to investment in government bonds and of course treasury bills. As you may be aware, we mentioned part of passive investments will involve investment in government bonds and treasury bills. In Kenya, the investments in both bonds and bills are giving quite good rate of returns, and it's another avenue where you can invest passively, that is, you park your money and you'll be collecting returns. So it's important for you to note that bonds and treasury bills are issued by the Central Bank of Kenya. For the treasury bonds, these are long-term investments. Usually they will differ from treasury bills in that treasury bills are issued for a duration of 91 days, 182 days, and 364 days. But for bonds, you can do upwards of 8 years, 10 years. There will be bonds as high as more than 10 years. So it's important for us to differentiate the two instruments. Treasury bills are short-term in nature. Treasury bonds are long-term in nature. So treasury bills will usually be issued at a discount. Like if you are bidding for treasury bills of 100,000 shillings, you are likely to find that they were awarded at say 97, which means you only need to pay 97,000 shillings. But when they mature, you will get back your 100,000 shillings. So for this session, I want to focus on treasury bonds, and in a later session, we'll discuss treasury bills. But I want to focus on the treasury bonds, which are long-term in nature. So primarily, we have two types of treasury bonds in Kenya. That is infrastructure bonds, which are bonds whose money is intended to go to infrastructure projects. And then we have the ordinary bonds, which are known as the FXD. So the difference between the two is mainly the purpose. Infrastructure bonds are issued purely for infrastructure projects. Now, by their nature, infrastructure bonds, the income you generate therefrom is tax-free. You're not taxed on it. While for the ordinary bonds, the FXD bonds will be taxed at the rate of 15% if they are for a shorter term, that is less than 10 years. And where they are for more than 10 years, then the tax rate would come down to only 10%. So it's important to have that distinction in terms of taxation. Now, in terms of investment and how you get to the rates when you're investing in bonds, usually bonds will be issued at a minimum of 50,000 shillings. Previously, infrastructure bonds attracted a minimum of 100,000 shillings. But nowadays, both are being issued at a minimum of 50,000 shillings. It's important to note that. So you cannot go and buy bonds of 3,000 shillings or 5,000 shillings. Bonds will be at a minimum of 50,000. In the past, the government issued a one-time off bond that was known as M-Akiba on M-Pesa, which you could buy through M-Pesa. M-Akiba had a minimum of, I think, 10,000 shillings. So that was the lowest, but ordinarily now the bonds that are being issued, you find them having a minimum of 50,000 shillings. And for infrastructure bond, there used to be 100,000, but nowadays we have seen bonds of as low as 50,000 shillings. And where you have to buy increments, again, the increments will be in 50,000 shillings. So it's very, very important to note, for you to buy bonds, you have to invest in increments of 50,000. So you do 50,000, 100,000, 150,000, so on and so forth. So ordinarily, we mentioned treasury bills trade at a discount. Bonds may trade either at par, that means you buy bonds worth 100 shillings at 100 shillings per bond, that is, but minimum of course will now be 50,000. Or they can trade at a discount. So if you have bid bonds for 50,000, you could find you're being told to pay 47,000, which means they trade at a discount. Or they can trade at a premium, which means they could be issued at a price above the par value. Now, important again to note, usually when the government issues bonds, The rate is usually market determined for small investors. And when we talk of small investors, we are looking at anybody investing less than 20 million shillings. So those who are doing more than 20 million shillings then would be in a position to do what we call competitive bidding, which means they can participate in determining the rate. But for the small investors, we take the average. So when you are making your bid, you select what we call a non-competitive bid, which means the average, the market determined rate is what you will get. That rate is very important to appreciate because it gives you what we call the rate of return. The rate that will be giving you the yield of the bond. So if the bond has a different coupon rate from the yield rate, then it will then trade either at a premium or a discount. But ordinarily in the recent past, we have had several bonds being issued. The most recent one was an infrastructure bond that closed on Valentine's Day, 2020, the year 2024, the current year we are in. And that bond gave a rate of about, I think, 18.03%, thereabout. I'm not very specific on the actual rate, which would imply, what does it mean? That if you have given your money to the government, say 1 million shillings, then every year you are entitled to interest of 18%, which is 180,000. Then the government would pay that interest in 2 installments. So for bonds, interest is paid biannually. So if you have bought an 8.5-year bond, that is a bond for 8 years, then over those 8 years you expect to be paid every 6 months. You'll be getting 9% if it's an 18% bond. So every 6, so if it's a bond for 1 million, then you'll get 90,000 after 6 months and another 90,000 after another 6 months. So every 6 months you'll be collecting your 90,000. Of course, if it's an ordinary bond, it will be net of taxes, withholding tax. If it's for a 10 year less than 10 years, it will be at 15%. If it's for a 10 year more than 10 years, then it will be at 10%. Another important point to note when you are making your bid for the bonds is that some of those bonds may carry an early redemption for the small investors. You'll see them saying for anybody who has invested less than 1 million shillings, then there will be early redemption within 3 years unless the bond is encumbered. That is to mean unless you have used this bond to secure a loan, which you can do from the banks. So if you have a bond and you're short of cash, you can go to the banks. They will give you a portion of that money as a loan, of course against the bond. Your bonds, again, you can sell them in the secondary market. So it's possible for you to sell your bonds in the secondary market. Of course, they are affected by the changes in interest rates. So if the interest rates have gone up, then whatever bond you are holding would go down in terms of value. So the other option is, of course, to hold a bond to maturity. So for you currently to trade bonds, you need to register with the central bank. They have now introduced an app on Play Store or on iOS. You can again get it from App Store. For those who are using iPhone, for the Android people, you can get it on Play Store. There is an app known as CSD, and we shall be doing a video later as to how you can be able to subscribe and be able to start seeing the bonds that have been offered and be able to participate in this. So for now, was to introduce you to the concept of bonds. Is another good platform for passive investments, and each and every person, of course, needs to have a bond account. We shall again also do a video on the accounts that you need to have. Key among them, of course, you need to have SACCO accounts. You already discussed what a SACCO is. You also need to have a bond account. The other question that people may ask then, how do I get the 50,000, the 100,000 probably? How do I accumulate this money? So another useful account that we shall be discussing or investment tool is a money market fund. And it will be in our next video. We'll be explaining what is a money market. So one of the ways of accumulating money to buy bonds is using a money market account, where you accumulate funds. Once you get to the amounts necessary, then if a bond is offered, you can draw it from your money market account and be able to buy a bond. We shall, in our future videos, be elaborating more on bonds. This was an introduction that you need to consider investing in the government. And the fun fact, you don't need to even be supporting the ruling party for you to buy bonds. You could be in opposition and you're still earning from the same government. Thank you very much for your time. Of course, our focus here is on financial wellness, regardless of your political affiliations. our key is to support you as an individual to make good choices that will ensure that you have enough for yourself, enough to enjoy this life, and enough for your future. Thank you very much. As usual, I'm your coach, CPA Tonie Njiru. We shall be interacting more and discussing more on passive investments. Watch out for our next video on money markets, funds, and in subsequent videos, again, we'll come back to discuss more on investment in bonds and treasury bills. Thank you. Like our video, subscribe, share with your friends, follow us on the various social media platforms on TikTok, Instagram, Facebook, and others. Thank you.
So,
Kangapi?
do it.